Hi, and welcome back to the Food Fund, where we explore all things related to investing in food and beverage stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in great companies. If you love food and love stocks, you will definitely love this channel. In this video we will be doing an analysis of Laird Superfood and seeing if it would be a great addition to the Food Fund. Be sure to watch through the end of the video where I share my final thoughts on that. Now, let's go ahead and jump right in. Cue the logo. Let's start with some background info on Laird Superfood. Laird Superfood is a plant-based food company founded in 2014 by Laird Hamilton, the world-renowned big wave surfer, and Justin Mears, a former professional snowboarder. The company is based in Boulder, Colorado, and it sells a variety of superfood products, including protein powders, nut butters, and energy bars. Now let's check out the charts. Starting with the 1-year chart, we see that Laird Superfood had a CAGR of about -45%. Zooming out to the 5-year chart, we see that Laird Superfood had a CAGR of -71%. Laird Superfood share price has fallen big time. Now, let's take a look at the fundamentals. Gross margin is 15%. Not horrible in comparison with other companies in its industry with negative gross margins. Revenue has compounded at around 40% over the past 5 years, and though it has started to trend downwards since 2021, most recently revenue has reached $34.6 million. Good revenue growth with decent gross margins, but the downtrend is worrisome. Looking at free cash flow, we see a worsening. While capex has increased at a CAGR of 12% and stock-based compensation changes at a -8% CAGR. As we can see, free cash flow flipped positive in 2022 but quickly reverted back to negative status in 2023, with the company now burning $8.5 million per year. Unfortunately, the positive free cash flow in 2022 was from a bolus of cash and investment income, not operating income. Laird Superfood is still struggling to run a profitable business. Weighted average shares outstanding have increased dramatically over time, going from 3.5 million shares in 2018 to 9.2 million most recently, portends a 25% CAGR. The good news is that since 2021, Laird Superfood has issued very few shares and dilution from that point onwards is negligible. Additionally, given the current low price around $1 per share, Laird Superfood cannot really issue a lot more shares for fear of dropping the share price below stock exchange minimums. Thus, if Laird Superfood needs to raise more cash, they will likely do so through debt offerings. Now let's view return on capital employed. The return on capital employed has fallen from -48% in 2018 to -108% in 2023. This is just awful. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 68 days in 2018 to 101 days most recently, Laird Superfood has actually become less efficient over time. This is not good. Last, let's explore Laird Superfood's debt metrics. I like using the net debt to EBITDA ratio because it shows debt in relation to the company's earning power. Laird Superfood's net debt to EBITDA is 0.6. On first look this may seem good, but there is an explanation under the surface. With no debt on its books and cash in the bank, Laird Superfood is able to maintain a negative net debt balance. This is a very good thing. But with negative EBITDA, because the company is unprofitable, both the numerator and denominator are negative, resulting in a positive net debt to EBITDA ratio. So, the fundamentals of Laird Superfood are not good, but the stock is cheap and could grow in the future. Should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Laird Superfood. It is a food company with a gross margin of 15%. The 5-year revenue per share CAGR is 12% and the 5-year free cash flow per share CAGR is -22%. Again, the gross margin and revenue growth are decent, but nothing good comes from investing in a company with falling free cash flow. A return on capital employed of -108% is very bad. Next, the cash conversion cycle of 101 days is also very bad. Concerning debt, a net debt to EBITDA of 0.6 in this context means that Laird Superfood has no debt but also has no earnings. So from a fundamental standpoint, Laird Superfood is pretty risky. The question is there a price at which this risk is worth it? Now let's switch our attention over to valuation. Laird Superfood isn't profitable, so its relationship with the S&P 500 earnings cannot be determined. Likewise, the price to earnings growth, or PEG ratio, cannot be determined because the company isn't profitable. One thing we can check out is the cash position. Most recently the cash per share is $1.30, higher than the current share price. Scrolling up we see that the enterprise value is negative, which confirms it. But remember, the company is burning $8.5 million per year, which means they are constantly drawing down the cash position to run the company. Laird Superfood has a little over 1 year of runway before they run out of money. They need to become free cash flow positive within that time in order to survive. Laird Superfood is an interesting company that is in a tough spot. Management did well to pay down debt as the interest rates were rising to buy the company over a year of runway. However, it may just have been too late. Although investors may try to arbitrage an acquisition or liquidation, it does not seem worth it with 1-year treasury bills yielding about 5% risk-free. This company will not go on the watch list, but I am curious to see if they achieve free cash flow positivity or bankruptcy in the coming quarters. Many thanks for watching. What do you think about Laird Superfood and its cash burn? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.